Hi, everyone. This is Jason Bierach of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today, instead of a normal podcast interview, we have two returning guests, and they're going to be joining me in a round table. We have Doc from the Silver Doctors, a popular information website on gold, silver, and news, and also Turd Ferguson from the TF Metals Report. So thank you for joining me again here today, gentlemen.
It's been a while. Thanks, Jason. Glad to be back.
Jason, anytime you're going to have an abnormal podcast, just call up Doc and Turd, and you're ready to go.
Well, I was hoping actually I'd get some good commentary out of you guys and a laugh, because I mean, after the bloodbath that we've been, it just seems like every day, you know, like that Jim Sinclair writes about, you know, slash your wrist moment, that's when you buy. Well, it seems like that's happening every day.
Well, that's for sure. It's kind of I don't know, people joke about how, hey, all of my bars and coins all look the same. And that's, but it's not a joke. I mean, that's absolutely true. And the rationale for buying and holding physical metal as your insurance against what is most definitely coming, none of that has changed. All that has changed is the paper price, the fiat conversion price. And frankly, I mean, I don't mean to sound coarse. I'm down as much money as everybody else, okay? So I have just as much license to say this as anybody that's listening that bought silver at 40 or gold at 1,700, okay? I'm there with you, all right? So I don't mean to be coarse and all that kind of stuff, but sorry. I mean, okay, fine, give up, sell your metal and convert it back into dollars. Knock yourself out, okay? If you're just going to go back now to thinking that everything's fine because CNBC has told you so, then fine, go for it. I, for one, am not going to do that. And I have every bit of confidence that I've made the right choices because I know exactly where this is all headed, and the paper fluctuations mean nothing.
And I think that's a very good point about the paper fluctuations, guys, especially if you're just buying physical, you know, you're not buying the mining shares or anything like that. I mean, because I don't know about you guys, but I don't consider physical metal really an investment per se. I just really consider it, you know, insurance. It's outside the system. There's no counterparty risk, you know, unless I'm storing it with a foreign vault or something, or an American vault or something like that. But as long as I have the metal, you know, in my house or in a safe or something like that in my house, then you know, there's no real counterparty risk.
Exactly. And I mean, this week here is really, over the last week, has been a bloodbath. But when you take your emotions out of the picture and step back and look at a long-term perspective, gold's really looking pretty good, honestly. From it still is higher than the last correction before the big move. Up into 2011, that high near, 1915. But the support before that was around 1,000. We're still well above that. But again, I just go back to, if it was easy to ride a 15, 20-year secular bull market to the very end, everybody in the world would be doing it. The hard part is hanging tight through the corrections and through the tough parts when your emotions scream at you to sell and just capitulate. But if anything, times like this is where you should be adding to your position, really in a pyramid-type formation. That doesn't mean just sell your house and throw every dime you have into the metals at one buy point here at, say, 19 silver and 12.25 in gold. But in a pyramid-type formation, I'm definitely a buyer right here and right now in both gold and silver. Now, that doesn't mean that the lows aren't pierced, and perhaps gold does drop towards 1,100 or even test 1,000. Perhaps silver does break 18 and head towards 16. But if that happens, then I'm going to be a bigger buyer. And so really you have to take that more of a long-term view and perspective and think. I mean, just look at stop and think about silver right now is back at Bear Stearns level. So think about everything that's happened since Bear Stearns. Think about all the money that's been pumped into the system, all the quantitative easing 1, QE2, QE twist, ZERP, QE3, QE4, QE forever.
And that's only the U.S. That's
only
not even
that's only the U.S. Yeah. Exactly. I mean, we have Japan going crazy now. The ECB is getting ready to. So
Chinese credit bubble, yeah. You have all this money that's floating around all over, and it's causing asset bubbles, in global real estate, the general stock market, the Dow and the S&P. It's going into the dividend stocks. It's going into, there's hyperinflation arguably in rare wine, collectibles, antiques, diamonds, those types of things. And it seems, everything's going up. But commodities, but gold and silver, I mean, obviously some of those commodities, are tied to the real world economic growth, and there's not real economic growth because the developing worlds, China, India, South Africa, Turkey, Brazil, are all dealing with really bad inflation right now. So, it's just really amazing that Wall Street is so short-sighted. Maybe they used to not always be this way as much. I mean, obviously there used to be traders and stuff like that, but I mean, from the Wall Street people I talk to, they only care about what happens tomorrow, what happens next week, next month, next quarter. They don't give a damn about what happens 2, 3, 5 years from now. They honestly don't care. Their portfolios are not allocated to that. They're billions of dollars in portfolios. And, personally, from a political or any other standpoint, most of them don't care what happens a couple of years from now.
It's all about the flow and the momentum.
And you would think they would remember the lessons of 5 years ago, but apparently that's all been forgotten.
Well, especially when the bailouts are limited, I guess, right, guys? So there's just no moral hazard to prevent any of this. And, you brought up some interesting numbers here for gold and silver, and you look at those things, and, I do extensive research on the primary gold miners and the primary silver miners. If we get anywhere near 1,000 for primary gold miners, there's going to be emergency mergers. There's going to be producers, the large guys, who are going to have to shut down their higher production cost mines and, maybe put them on care and maintenance or start selling off assets because they're just carrying too much debt. And for silver, the same thing can be said under 18. I don't really know any primary silver miner who can make money, even around $15. God forbid we go lower. Now, Turd, in terms of the technicals here, around 1180, we have strong support. I don't think we're going to hold 1220. I just don't. It looks like there was a little short covering rally today. Do you think we're going to be taking? Do you think we're almost certainly going to test 1180 then?
Well, as readers of my site know, I've been saying for 2 or 3 weeks now that this ultimately would end up with what will be looked upon as a double bottom. We had the spike down into late June on pretty heavy volume and decent open interest, a bounce back due to a number of different reasons that lasted into the end of August, and now just a pretty steady decline on declining volume and declining open interest. I do not expect a break of 1180. I don't really expect a break below 1200. I'll tell you right now, it's Tuesday evening. I expect us to close up on the week. By the time we get the GDP revisions on Thursday and the BLS BS on Friday, I still expect us to have a green candle by the time the week is done. I was saying that a week ago, and I've spotted everybody a $25 lead so far this week. I don't expect that to happen. There are a number of reasons why I don't, but primarily because this entire counterintuitive move over the last 12 months has been orchestrated by J.P. Morgan, who is the primary, I will call him the dinosaur in the room, the dinosaur in the metals market. They were net short something like 80,000 contracts. The entire commercial category, bullion bank category, was net short something like 750 metric tons of paper gold at the onset of QE to infinity a year ago. Prices should have gone higher. They didn't because the banks weren't positioned for them to go higher. They had to jam price down. They violated all these technical levels to incite the spec shorts to jump on the momentum chasing bandwagon. The biggest move was in April when they threw 400 metric tons of paper at the market in one day and smashed through the bottom of the range at 1525. Because all that has taken place, the banks have, as a whole, have reduced their net short position by over 90%, transferring that liability to the specs. So now, if everyone who trades the metal thinks that the speculators are going to be right, who are now short, versus J.P. Morgan, who is record net long, J.P. Morgan runs that market. But you're telling me that the specs they're going to be the ones that are right, and J.P. Morgan is going to lose money. I don't think so. My bet will be and is on the metals turning and turning very soon. A rally through December as J.P. Morgan takes delivery off the COMEX, and a rally and a resumption of the bull market in 2014. Of that, I am as confident as I can be.
Yeah, and, I just look at the demand, and Doc, maybe you can comment on this. I just see the demand coming out of India, even though they've tried the central planners, and I think it's been like the U.S. and all the other developed world countries who have tried to stop demand from India. The Indians are saying, our trade deficit, this and that, but it seems to me that, it's been a concerted effort to stop demand from India. Because, there's nothing they can do with the Chinese, I guess, because the Chinese, I guess, will say, screw you. And the Chinese have such a large military presence, they can't fully demand everything from the Chinese. But they could do that to the Indians and say, you can't take as much gold, or we got to stop you guys from taking a delivery of as much gold.
That happened 12 months ago. That's why you're seeing all the actions that India's made over the past year and a half. I think it was about 12 months ago. Might have been 18. I'd have to look it up. Bernanke and Geithner both got on a plane and they went over and they met with India's finance minister. It was the first time the U.S. Fed chairman and Treasury secretary had ever gone and met with India's finance minister. So what do you think that conversation was about when you look at...
I did not know that. That is very...
Look at India's actions over the next 12 to 18 months. What do you think was included in that discussion?
Obviously, it's about you coming up with a good cover story, right? For trying to suppress gold demand. That's what it sounds like now.
you got to do something to stop your citizens buying gold. This has to stop. We're about out of it, and you guys need to do something.
Okay, well, do you think demand then is going to still continue to increase? Because we just see Chinese demand is going bonkers, and I don't think there's anything the developed world central planners can really do about that, because China, just has so much. China's holding everyone's debt. I mean, China has basically the rope over everyone's head, or the guillotine, or whatever you want to say. It's just a really interesting market that it's not responding to supply and demand fundamentals. And then you see, Bitcoin going nuts, going straight up. Do you guys think Bitcoin is doing what gold and silver should be doing if it was a free market?
It's doing what it will do at the end of its bull market. A 15-year secular bull market doesn't just fade away in the midst of record-setting physical demand. It just doesn't end like that. Any massive secular bull market doesn't just kind of fade away into significance and sell off while you're seeing record physical demand. So I agree with Turd that over the next 12 to 18 months, I think you're going to see some shocking moves both in gold and in silver. And ultimately, at the end of the bull market, massive secular bull markets end in the type of trading action we've seen in Bitcoin back earlier, I think May, and then look at Bitcoin's November chart, and that's how bull secular markets end, in massive manias. So to me, I'm not ready to consider getting out of gold or silver positions until several things happen. That would be one of them. If you saw that type of action in gold or silver, or unless Western politicians get some sanity, and I don't see that happening anytime soon.
I'm gonna get out of my gold and silver when the new global currency regime is finally introduced, and I can convert it back into some other form of actual money. For the time being, I can only convert it back into some other type of fiat money. And with fiat money being devalued, with the road of inflation and devaluation, the only road that the Keynesian central planners can take as they try to fight their way out of the paper bag they've put themselves into, there's nothing that would get me to sell and convert my metal back to fiat dollars. You wonder why people say, the Chinese demand, will the Chinese demand ever? No, the Chinese demand is never going to end, because they see what's coming. And they're working off a multi-year, multi-decade plan like every individual should be, not just what's going to happen tomorrow with price or next week, but a recognition that the current global financial system based on debt is unsustainable. I mean, it's sustained this far, but now finally the debt is all increasing parabolically. And it's just not on a stable enough foundation that it can possibly continue indefinitely. The Chinese know that. They continue to stockpile and convert their paper assets into hard assets, real assets. That's not going to change. That demand isn't going away. Jason, you talk about mines shutting down. I mean, since when does the law of supply and demand has that been repealed somehow? Did Obama veto that like he does all these other things, or write some kind of executive order, repealing the law of supply and demand? I mean, it wouldn't surprise me if he did. He'd probably try. But that one he can't.
Keynesian economics, to add to your point, Turd, Keynesian economics was invented to defy gravity, and the Jim Rogers analogy is the Keynesian economics was designed to say a tree can grow all the way to the sky and not, ever fall down or topple or anything.
Exactly.
Like that.
I just watched JFK again 2 weeks ago, the old Oliver Stone film, and there's a line in there where Kevin Costner, playing D.A. Garrison, says, theoretical physics will tell you that an elephant can hang by its tail from a daisy off of a cliff, but look around, that's not true. And it's the same thing. I mean, all the Wall Street guys that believe in paper and leverage and derivatives and theoretically it can go on forever, but it's not. It's not going to. And so I continue to hold my insurance and not waver.
And I think that's important points, gentlemen. And, something here about the metals is that all the central planners right now, every single government on the planet, it's not just the U.S., is underreporting inflation. There is inflation all over the globe.
Right.
Even though credit in the private sector may be contracting, that inflation has already been put in the global supply chain. And once it is in the supply chain, it doesn't really leave. Look at the prices at your favorite restaurant or your food stuff. The portion sizes are shrinking. They're not going to come back. The restaurant prices may stay the same, but your portion size is going to go cut in half. And the companies are admitting this honestly on their conference calls, but they're not calling this inflation. They're calling this something else.
Jason, you said earlier about all the other countries of the world, the creditor nations, having terrible inflation problems. Well, that's because of what we're doing with all these developed, if you will, nations printing all this money. It's what John Connolly said was the exorbitant privilege of having the reserve currency. We can print it, but it's your problem, not ours. And that's what you're seeing now. And when those dollars finally come home to roost, then that's when it's all going to go to hell. But in the meantime, what choice do they have but underreport inflation? One Greenspan said that 20 years ago. That's why they changed the CPI so that they could cut the cost of living increases of Social Security recipients. Because if they hadn't, the amount the U.S. would be spending on Social Security would be twice what it is now. If they were actually reporting accurate inflation numbers, there'd be zero buyers. Not that there's hardly any buyers of treasuries to begin with at 3%. But if it was published and acknowledged that inflation was really 8%, you'd have to be as dumb as a box of rocks to buy a treasury at 3%. And so they have to underreport inflation. And frankly, that's all part of the gold suppression story. They have to keep gold down. One of the reasons is because a rising gold price would reflect a loss of confidence and would reflect underlying issues that would force interest rates higher because people would no longer want bonds because clearly there are all these issues. And that's all part of why gold has been hammered so severely for the last 12 months because they're printing $85 billion a month. And
it's more than that.
That's true. That's true. And they're desperately trying to maintain confidence in these last days. Well, I don't mean last days like, Book of Revelation stuff. I'm just saying last days of this current system.
There's the headline. Turd says Revelation in progress.
The end is coming. Yeah, I've got a sandwich board I wear around the house. Mrs. Ferguson likes that. She knows I'm wearing underwear. But the thing is, the end is near. Again, I don't think it's from Comet Ison, but the end is near for this debt-based system. I mean, it can work for a while and you can print and pay your bills, but when ultimately your credit card is at its limit and you're only opportunity to pay it off is to go get another credit card. I mean, eventually that just doesn't work anymore, and that's where we are.
And Doc, you have anything else to add to that with the gold price suppression or the macroeconomic in terms of inflation and what you see? How much longer do you think this game can keep on going here?
Well, how much longer they can keep the game going that's probably the toughest question there is. I mean, if you would ask me in 2008, do you think they could keep this thing going for 5 more years? I would have said heck no. But
right. Well, I would have agreed with you guys, but I don't think we understood how bad things were in some of the other developing countries. So I think, because on a relative basis, like, the U.S. had the world reserve currency, and the U.S. still has all these great entrepreneurs. We have these new technology companies that are starting up and, still developing some forms. There are pockets of free market here in the U.S. as opposed to the rest of the world. That, I think, and in the shale revolution, right, cheap energy, that's also saved the U.S., saved things for at least a few years, postponed things, right?
And Jason, the infrastructure wasn't there for anything else 5 years ago. But now, as Doc said, it's surprising, and I would say this too. I mean, the power of the powers that be to keep going is what's so surprising. But that infrastructure for an alternative system wasn't there 5 years ago. Now you look around, the yuan just supplanted the euro as the second biggest currency in global trade. And you've got all these swap agreements that have been set up. I mean, that infrastructure is now getting laid. And oh God, did I just say that? You can edit that out. But anyway. I'm talking about the infrastructure. Anyway, that now is getting closer to being in place. And so the next time, at a time of someone else's choosing is when this will all unravel. I'm sorry, I didn't mean to interrupt you, Doc.
It's okay.
that was great. I enjoyed that. That made the whole podcast.
Turd's entertaining me again. That's why I come on with Turd. It's my entertainment for the night.
Thank you. Especially as it gets later at night, I get crazier and loonier.
Are you having some adult beverages, Turd?
No. It's only Tuesday. I don't start drinking again until Wednesdays usually, Jason.
Okay. Okay. Well, Doc, anything else to add since Turd interrupted you there very briefly? Oh no, he had a question.
Just the one other thing to point out regarding inflation. You see all over the forums and people emailing and commenting on my site and Silver Doctors, and I see the same type of thing on Turd's site, and you probably do the same. It's just the misconception of inflation that inflation really is not the result, which we see and call inflation incorrectly, the increase in prices, but inflation is the increase in the money supply, and that, without question, is massively inflating. You could almost call it hyperinflation of the supply. And how that results in increased prices depends on a variety of factors with the economy. So just want to make sure all the listeners clearly understand that inflation, which is typically perceived as the increase in prices, is really a result of true inflation, which is occurring. And the result of increase in prices can vary depending on assets, depending on the economy and the state of the economy at the time. That's why you don't see a one-to-one linear correlation of increase in prices across all assets, because that slush money, if you will, flows unequally to a variety of assets. So you may, while the money supply is inflating, you may see actually a deflating prices in, say, the real estate sector, while agriculture, the metals, are inflating in prices, because the money flow doesn't flow to all sectors one-to-one instantaneously. So I just wanted to make sure that listeners are aware of that and can understand the distinction between those two.
Yeah, and that's called the Cantillon effect for our listeners there, because he said he was around during John Law's time, who was the original Ben Bernanke, I guess. and Cantillon said that all prices would not rise evenly. And, the inflation really, especially here in the U.S., a lot of the inflation hasn't gone into the consumer prices as much as it has gone into assets, because, I don't know if you guys would agree with this, but the majority of inflation all over the globe has gone into asset prices in different levels all over the globe, and it's gone into, and it's here in the developed world, it's been exported to the developing world because of fixed exchange rates and dollar pegs.
Absolutely. And now look at the revolution and the social upheaval, civil unrest that is fomenting around the globe because people are hungry and they can't afford just the basics. And it's all because of countries like the U.S., Japan, the European Union, all just selfishly printing this money to keep things alive for another week or two or month, and exporting all that inflation. That all of that is coming back home, as Reverend Wright so famously said about the chickens coming home to roost. That's all going to come home to roost eventually as well, and we've got to be prepared for that because that is a certainty in the future.
So let's wrap up then the gold and silver market as you see it right now. So you think then that there's a good chance 1180 technical support will hold. I see demand globally rising for gold and silver. I haven't really seen that much demand destruction. Yes, the headlines in India show that the actual people who go to the legitimate dealers has decreased a lot. But I've also read stories saying, humongous smuggling premiums, and the smuggling stuff is off the charts. And then, on the supply side for gold and silver, there's mines about to be shut off. You have some of the world's largest silver mines that were either postponed or the Kennecott one in Utah that was shut down. And, if this market was a rational market, I don't think we'd be anywhere near these paper prices.
Right. It's amazing that when you look at Kennecott, the next day, I think, or day or two after Kennecott, that big mine collapse back in, April or May, I think it was 16% of U.S. annual silver supply went offline instantly. And we also had, that was only a couple of months after Barrick's big blow up with Pascalama, yeah. And which is even a bigger takeoff. And
yeah, that's delayed indefinitely, I think, now, right?
Yep.
Right. So, you're talking about millions upon millions of ounces offline.
That's over 20 million a year, yeah. And then there's other mines, too, that we could name that are being delayed or have been postponed indefinitely, too.
Yeah, so
and go ahead, Doc.
Oh, go ahead.
Well, look, there's no question the physical demand, all of that stuff, and it's all extremely important. But we all sit here and scratch our heads and say, well, how come then the price keeps going down? And we all recognize that it's because of the price action that takes place 5 hours a day trading paper derivatives on the COMEX, that futures tail wagging the physical dog. And it is what it is. Okay, so then who controls the COMEX? JP Morgan controls the COMEX. And beginning in June, for the first time ever, JP Morgan moved net long COMEX gold futures, to the tune now where they've reversed an 80,000 net short position a year ago to an 80,000, at least 80,000 net long position currently. We just got, as you and I and Jason have been talking, Doc, I just got the latest delivery report for today on the COMEX of 348 deliveries of December gold today. JP Morgan's house account took 336. What's that, 99%? And for the month, where there's going to be up to 10,000 contracts delivered, they've only delivered 1,086, and JP Morgan's house account has taken 1,011. That's 90%. And they are still massively long. Okay.
And they're draining the GLD too, right?
And whether they're doing that or they were doing that, exactly, and who knows who's going to do it going forward. But the point is, JP Morgan is now long, and if it's the COMEX that now controls the price, and we all recognize that because it's against the physical fundamentals, and if JP Morgan controls the COMEX and JP Morgan is long, then price is going to go up. It doesn't need to be more complicated than that. And I'll just leave it at that.
Yeah, I'm frustrated. I don't know about you guys, but I'm just frustrated too. So that's why I wanted to have both you guys on to speak with my listeners. And Doc, if you have anything else to add, that would be great.
Jim Sinclair pretty much nailed it. I think it was 5 or 6 years ago. He said that the gold community would not be able to, as a whole. Now, obviously, there's a lot of people who will hold on through the end, but he said they're not going to be the ones to make the most money in this bull market. It's going to be the bullion banks, the J.P. Morgans and Goldman Sachs of the world. And I mean,
Yep.
if you step back and look at the picture today, you're seeing capitulation among the retail investor and the bullion banks acquiring gold everywhere they can. Goldman's trying to get it from Venezuela. J.P. Morgan's going massively long on the COMEX. So all I would have to add is that Sinclair nailed it 5 or 6 years ago, where it's playing out to a T.
Hey, and I'll go one more, Doc. Jason was talking about the miners. What, the Hui is back to where it was in October of 2008? I mean, with the stock market tripled since then, and the Hui's back to where it was in not only 2008, but where it was in 2004? Who's not to say that all these investment banks, hedge funds, all these folks that know where the world is going are not simply driving those stock prices down in an attempt to bankrupt and force mergers to what do they used to call that? Green mail, right? Back if you watched the Wall Street days, right? You blast these stocks lower and then take them over at a much lower price. That's defenseless company. You accomplish that across the board. Now all of a sudden you, the investment banker, the investment bank, you own the mine. You own the production when the world goes back to some type of gold-backed currency. I don't mean to be, conspiracydaddy.com, but I mean that's something you got to think about. I mean, is there an underlying rationale for driving these prices down as far as they have? Because it certainly doesn't make a lot of sense.
That would not surprise me, because if you look back through financial history and you see what happened, prior to FDR, confiscating the gold and then giving you your $20, $20, and then revaluing it to $35, right? Bernard Baruch and John Maynard Keynes knew about this inside information that the stuff was could be confiscated, and they were well positioned ahead of that by buying gold and silver miners before the big announcement when they went through the roof.
There you go.
So. Okay, well, gentlemen, I just want to we're over 30 minutes, and I know Turd wants to get to bed, so I just want to thank you. Put that turd to bed.
Put that turd to bed.
After he mentioned that reference there earlier about turd and staff, I was thinking Mr. Hanky the Christmas poo with a Moses beard and a Santa hat and a Moses staff.
A turd hat, a yellow turd hat would be better.
I don't. Well, yeah, I like that skit from Saturday Night Live. That was an all-time classic. Well, thank you, gentlemen, for your time, and please tell our listeners more about your websites and any products or services you offer.
Go ahead, Turd.
No, well, Turd Ferguson is not my real name, but even my mom calls me Turd. TF would be the initials, and so the website is tfmetalsreport.com. It's a free site populated with a bunch of like-minded people. We're all just there trying to help each other. To help pay the bills, I do all of my analysis, or at least most of it, and a daily podcast behind a whopping $10 a month paywall. But that keeps the site afloat, and I think people see great value in it. So I plead with people to please check it out.
And our site, you can check out the news and analysis at silverdoctors.com. And then on the bullion side is stbullion.com. And we get a pretty big news. January 1st, we're going to be launching ammunition sales as well. It's going to be labeled lead bullion. So you can stack your gold bullion, silver bullion, or lead bullion
That's awesome.
at SD Bullion. So.
Oh yeah, ammo is a big business now, and from what I've heard, Doc, I've gone to the shooting range once before recently, and they tell me they're always out of bullets, and the price always goes up. So it sounds like a growth market to me.
Doc, if you get that DHS contract, you'll be set.
Be retired.
Yeah.
Actually, some of the suppliers aren't even interested in working with anybody because they've just totally sold out everything to the DHS for the next 3 or 4 years, and it's not worth their time working with anybody else on a retail consumer side, because DHS pays more than top dollar to get everything they can produce. So.
Yeah, I mean, it's only the taxpayers' money, and they could just print it right, so they don't mind paying a little bit more than the market price.
That's true.
Okay, guys. Well, we could probably go for this for a while longer, but I'll let you guys get to bed. So thank you very much for your time, and hopefully we'll have you guys each on again soon.
Great to be back. Thanks again, Jason.
Anytime, Jason.